Today, as I'm filming this, is a huge day because not only is it the 3-month anniversary of Champagne Sense, but it is also my 6-month anniversary of being a dividend investor with E-Trade. Well, I started off investing in dividend stocks with E-Trade to grow my passive income. What I really ended up learning was how to invest during the coronavirus pandemic. In this video, I am going to share my entire $14,000 dividend stock portfolio with E-Trade. I am going to share with you all the stocks that I bought over the past 6 months, both the winners and the losers. Of course, I also have to share with you the dividends these companies have paid me over the past 6 months. Also, I'm going to share with you the performance of the entire portfolio. Finally, I want to share with you the biggest things that I learned while investing during coronavirus. So ultimately, you can decide if you should be an investor during this pandemic. Spoiler alert, the answer is yes, I encourage you to start investing. Today, we're celebrating all the anniversaries, so I've got my champagne glass, but I don't have a bottle of champagne, so we're having my favorite black cherry White Claw. And while I pour this up, I need to give you the disclaimer that I'm not a financial advisor. I'm just a personal finance enthusiast. So take this information for what it's worth. Use it for inspiration and entertainment. But if you're taking financial advice from a YouTuber that doesn't know your specific situation, your finances, your goals, then you're silly. Before we get into all that fun that I just mentioned, in my last video where I invested my paycheck into my Robinhood portfolio, I mentioned that I wanted to highlight some comments from you guys on your favorite dividend paying stocks. I have an honorable mention from Panda Boss and 4K Fan, who both mentioned AbbVie as their recommendation. This is one that I own and that I'm very fond of. I'll show you the performance of this shortly, but I did want to highlight that. And this honorable mention is not because 4K Fan called me cute and witty, which of course is true, but that's beside the point. The winning comment from that video though goes to Dividend Grinder, who gave a fantastic analysis on 2 stocks that he really enjoys. The first one is Pepsi, where he made a brilliant comparison that Pepsi has so many different beverage and snack brands that they're almost like an ETF at this point. He also pointed out that Pepsi is just 2 years shy of being considered a dividend king. Of course, a dividend king is a company that has increased their dividend payments for 50 consecutive years or more. He also mentioned the potential dividend growth for Microsoft, which is another brilliant pick. Dividend Grinder is an account that I follow on Instagram, so you should really go check it out because the content there is fantastic. All right, guys, cheers to 3 months here at Champagne Sense and 6 months of dividend investing. Let's get into it. And don't worry about not getting me a gift for this anniversary. You can just hit that subscribe button or the like button to celebrate along with me. And you know I always love your comments, so please drop your thoughts into the comment section below. I sorted my E-Trade portfolio by largest position to smallest position, so that's the order I'm gonna go through these stocks. I'm also going to mention the percentage that company holds in my entire dividend investing portfolio because, as you know, I also invest extra cash with Robinhood. It's important to know the total exposure I have to any company, so that's why I'm breaking it down into both views. Let's get it started with Disney, which is my largest holding with E-Trade and also the largest holding of my dividend stocks overall at 11%. This week, they announced their first quarterly loss since 2001 at a loss of $5 billion. This is no surprise. Their theme parks were closed during coronavirus, and both movie distribution and live sports came to a halt during this time. This means they had a drop of 42% in revenue. They also announced this week, though, that their big release, Mulan, is coming to Disney Plus in September. I don't know if Mulan is so popular that it resulted in the stock price jump at the announcement. I know I'm not paying $29.99 to watch Mulan. I don't even think Mushu's in it, which, let's be real, is the best character of the whole film. You'll see in this information the dates that I purchased the stocks, the price that I purchased at, the average purchase price of all my purchases, the gains, the losses, all of it. If there was a dividend reinvestment, you'll see that as a fractional share under the quantity column. So here for Disney, like many of them, you'll see that I first bought the shares February 7th. And if you remember the annual performance graph, most things were at a peak at this time. This is important because you're gonna see a trend with my purchases. I bought a lot of things at a high. I had no way of knowing that when I was buying stocks in February, that it was at a high and that soon in March, all companies would plummet. You'll see that I bought shares at $141. So that initial purchase is at a loss, since at close of market today, it was listed at $130. Now, if I freaked out when the market crashed with coronavirus, I would have sold this and I would have locked in that loss, which was a lot worse a couple months ago. But you'll see that's not what I did at all. In March and in June, I bought more. And guess what? Those are all in the green. Because I kept buying when Disney was on sale essentially, I'm up almost 19% in my largest position. I'm not letting market fear during the coronavirus throw me off course. Yes, it's a big deal that the Disney parks are closed. And yes, it's a big deal that their movies and sports had to stop. But I'm confident that with the Disney Plus streaming and just the overall business model, they're going to come out ahead after this pandemic. Next up is JP Morgan Chase for my largest position with E-Trade. They are tied with Disney in my overall portfolio, holding 11%. I recently did a video of all my bank stocks and how they've reacted during the Corona crash, so go ahead and check that out. I wish my total gain with Chase was higher since this is my second largest position, but unfortunately that's not the case. I bought 5 shares in February that unfortunately had such a massive loss that all the shares I've picked up at a discount haven't compensated for that loss. You'll see I bought more in March and April, and those purchases are seeing green. Chevron is next on my list, and between E-Trade and Robinhood, 8% of my money is with Chevron. Their second quarter results show that they missed targets on both revenue and earnings per share. You'll see that Chevron is very popular among dividend investors though, because they are a dividend aristocrat. They have paid dividends at an increasing rate for 32 years. You'll see that I also bought them 6 months ago, and I have been picking them up at various times since then, with varying results. Johnson & Johnson is a dividend king. They have been paying increasing dividends for 57 years. They make up 8% of my total dividend portfolio, and you will be hard-pressed to find a dividend investor that is not invested in Johnson & Johnson. So let's see how I took advantage of buying their stocks in this time. Okay, that was a little bit of a letdown because I'm about break even overall with them. I have a little bit of a loss from my initial investment in February, but I have a pretty good profit from the investment I made in March. Unfortunately, that was only 1 share, so I'm not exactly rolling in the dough because of Johnson & Johnson. Okay, it's time to talk about Wells Fargo. And if you've seen my bank stocks video, you know why I need a drink for this. They make up 7% of my portfolio, combined E-Trade and Robinhood. I've lost about 48% of my initial investment from February with Wells Fargo. Overall, I'm just down about 17.5% because I've been picking them up as the price dipped. And that's really how you reduce your losses. You just keep picking it up at a lower price. Of course, this logic only works if you expect the company to stick around after this pandemic. Now we'll drink to Procter & Gamble, but for a completely different reason. Look at that performance for the past 12 months. All those Charmin toilet paper sales, I am sure of it. 6% of my money is with Procter & Gamble, and they're also a dividend king because they have been paying out increasing dividends for the past 63 years. I do see an overall gain of 5.44% with Procter & Gamble. Both of my February and May investments are in the green. Next up on my list is Pepsi. Between E-Trade and Robinhood, 5% of my money is with them. As I mentioned in the beginning of the video, they are this close from being considered a dividend king. They have been paying out increased dividends for the past 48 years. And they are a well-diversified company between the different beverage and snack items that they have, which also includes my favorite snack and my secret addiction, Flaming Hot Cheetos. So what I'm trying to say is, you're welcome for this performance over the past 12 months, because I think I had a lot to do with it with my Cheeto consumption. Overall, my position with E-Trade is down 5.66%. That's of course because I bought 5 shares in February, and the other additions to the portfolio are just the dividend reinvestments. 4% of my investments between Robinhood and E-Trade are with Delta. And this was really my coronavirus purchase. I wasn't invested in them before that time. But this really highlights a great point that I want to make about investing during coronavirus. In March, the market panicked and pretty much every single company plummeted with their stock price. This was the peak of panic, and it didn't necessarily have to do with the company profits or performance. Companies that really weren't impacted at all by what was going on still plummeted. So you know that for those companies, that drop was completely out of fear. Delta, on the other hand, dropped and they stayed down because, as we know, airline travel has come to a near halt. The same is true with the cruise lines. Now, do I believe that the airlines and the cruise lines will be there post-coronavirus? Yes, absolutely. But what you need to consider is, to make it through these times where there's reduced income, these companies are gonna have to take on debt. And that debt is going to have a huge impact to future earnings and what they can pay out in dividends. So this is definitely something to consider if you're looking to invest during this pandemic. You'll see I've been pretty active with my Delta investments. My first investment in March is at a loss, which is really driving the overall performance on this stock, which is pretty much break even. I went in strong buying 8 shares in March, and so the green that I've seen in my other purchases haven't quite made up for that. I'm holding my Delta stock, even though their dividends are paused right now. They're not doing dividend payouts right now. And I expect to see some negative impacts going forward, but I'm not gonna sell it right now. I'm not gonna sell it this break even. I do think they're gonna come back from this. And again, I'm a little unsure if I'm gonna dump more money into them right now. It's something I need to think about. But I have to highlight that this was my big Corona crash purchase. 5% of my E-Trade and Robinhood money is with Pfizer. They've had some ups and downs over the past 12 months, but you see where they're at right now is pretty level with where they were pre-coronavirus. And that results in an overall gain with Pfizer of about 15% for all my stock purchases. Even my initial investment in February before everything crashed is at just about break even. So I would say that over the past 6 months, this is one of my more solid investments. AT&T has been paying out their dividends at an increasing rate for the past 35 years. And 3% of my money is with them. I have a little bit of a loss at $24 with them in my E-Trade portfolio, but you'll see lots of activity. This is a stock that I frequently purchase in my E-Trade portfolio and also in my Robinhood account. 5% of my overall dividend portfolio is with Bank of America. And while they don't hold the worst position of my financial institutions, they're still struggling a little bit in this environment, just like everyone else. I am up $13 in the value of my Bank of America purchases with E-Trade, which is pretty good considering my initial investment in February is down almost 25%. 3% of my money has seen some ups and downs in my Verizon stock. As we can see, it has changed over the past 12 months. And they're not quite back to where they were pre-corona crash. This one is also all green, but pretty much break even. You'll see that I don't buy them nearly as much as I do AT&T. I only have that first purchase and then some dividend reinvestments. Coca-Cola is next on my list, and although they only account for 4% of my total dividend investments, this is a company that I want to invest more in. Looking at the past 12 months, you can see they have not quite come back to pre-corona stock prices. But they are a dividend king that have been paying out increasing dividends for the past 58 years. While I've had Coca-Cola in my Robinhood portfolio for a while, I just bought my first shares with E-Trade in June. Since then, I'm up 7.67%. The Bank of Nova Scotia is another one of my favorites, and they make up 6% of my combined dividend portfolios. They're no different from their financial institution counterparts in the US. They have not fully recovered from the Corona crash. But they have a great reputation as a Canadian bank, and I love diversifying into different countries. It also doesn't hurt that their dividend payout dates are in the lower months for my portfolio. I'm trying to even out the payments, so having Bank of Nova Scotia in my portfolio really helps. While I'm up 6% in this position with E-Trade, you'll see that I didn't start investing in them until June. Most of that 6% that I mentioned is with my Robinhood portfolio. So this one I'm looking to increase the position with. International paper is the next one on my list, and 3% of my money is invested with them. I've mentioned before that this is not an investment position that I'm looking to maintain, so while I made an initial investment in them, I haven't been adding money and picking up more shares recently because I think when the stock price picks up, I'm actually going to sell and get rid of it. Now, from the comments that I highlighted as honorable mentioned at the beginning of this video, they mentioned AbbVie. They're a fantastic company that have excelled since the Corona crash. They have 47 consecutive years of increased dividend payments, and 4% of my dividend portfolio is with them. This is hands down my best Corona crash purchase because I'm up nearly 45% since my initial E-Trade investment in March. Of course, that was only 2 shares, so it's 58 bucks. But you know what? It's still green, and that's still a high percentage. ExxonMobil has 3% of my dividend portfolio, and while their performance is still pretty low for the past 12 months, they have been paying out dividends for a long time. Their streak is at 37 years of increasing dividend payments. Similar story as AbbVie. I have huge growth with them, but not a lot of dollars. I just really bought them at the right time in this E-Trade portfolio. I also have some open orders right now that I wanted to mention. These are limit orders, so it means in the price column, this is the price that I said I will buy it at, and the quantity is how many shares I will buy at that price. Now let's talk about dividends, because that's really the coolest part of this portfolio. Even though we saw a lot of red in my positions with these companies, they are still paying me money to own shares in them. I then took that money, even though it's a little bit small, and I reinvested it in that company. I mentioned that's why you'll see like the fractional share purchases in those transactions, because it wasn't quite enough to buy a whole share, but this is how compound interest works. I'm buying portions of shares with money that wasn't even mine to begin with, and that will just grow over time. All right, let's talk dollars. In March, I received $17.65 in dividends. In April, $9.90. In May, I received a whopping $14.43. June is a big payout month for dividends, and I got $48.22. July, $14.03. And in August, so far, I've received $10.03. This comes to a grand total over the past 6 months of dividend investing of $114.26. Now, I know that doesn't seem like a lot, and it's definitely not going to let me retire, but it's still cool because during the coronavirus, when so many companies have impacts to their profits and their stock price hasn't quite recovered, I still made $114. That is then reinvested in these companies, which for many of them are still at low stock prices. So I'm buying these companies I've deemed to be strong, long-term companies at a bargain. I have $14,153 with E-Trade. Bulk of it is in those stocks that we just covered, but also in the open limit orders that I have that I just covered. And I also have money in cash because when there's an opportunity that comes up, I want to be able to jump on it and get more stocks. To summarize everything that we just covered, all the red, all the green, all the profits and losses, my overall portfolio is green, but just barely. I have a total gain of 0.33% or a whopping $34. This view of my E-Trade portfolio sorts my stocks from the highest total gain to the lowest. It isn't a shock that AbbVie and Exxon are at the top of this list for the highest total gain. because as we saw, I bought them at the optimum point in time. I really got lucky. Of course, it's just a handful of shares, so the total dollar gain isn't that high, but I'm still excited about that. For my biggest losers, it's not surprising to see the financial institutions in the red. After 6 months of dividend investing, it's safe to say that I am very wise. The biggest thing that I learned that I hope I've really made clear during this video is that dollar cost averaging works. If you don't know what dollar cost averaging is, check out this video that I recently did, which talks about what it is and also gives some examples on how it works. But really think about it. When I started investing in February, the market was at a high and nobody had any way of knowing that it would crash shortly after. If I just invested that one time, if I took all $14,000 and invested it in February, I would not have $14,000 today. There's no way. If I did a lump sum investment, all $14,000, I would have lost it. But I didn't do that. I invested a little bit over time, usually as I got funds, and I picked them up at varying prices. Obviously, sometimes they were high, sometimes they were very low, sometimes they were in the middle, but it all averaged out. So my initial investment is at a break-even point, but I still made $114 in dividends. And this isn't even a secret. Dollar cost averaging is a huge strategy in investing. So to say that this is the #1 secret to investing during the coronavirus pandemic isn't really fair. But hopefully I've highlighted how this has really benefited me, because this is how you gain the confidence to make money with your investments. The other thing I've learned is the importance of doing your research of strong companies up front. Of course, there was no way to predict exactly how this environment would impact these companies, how they'd react, and all of that. Nobody's a mind reader, but having a good baseline of understanding of these companies and how strong they were going into this really helped me identify when I wanted to make purchases. Well, that is it for my E-Trade stock portfolio on my 6-month anniversary of being a dividend investor. It's a little bit disappointing that I'm not wildly rich right now, that my overall portfolio is just at a break even. But hopefully I've explained to you why that's okay. I'm still investing more money, and I know it's just going to improve over time. 6 months is such a short period of time when it comes to investing. So I wasn't really expecting to become rich over these 6 months. So thank you so much for watching and supporting my channel, especially on the 3-month anniversary of Champagne Cents. Cheers to all of you.